Investing in real estate is a team sport. It's not an individual sport. Now, for the first decade I was in this business, I was the Lone Ranger. All I wanted to do was my own stuff. I didn't want to be bothered by anybody. I didn't want anybody else being a part of the decision-making process. I didn't want to consult with anyone. I wanted to be the guy. And that worked to an extent, but what I found in terms of scaling was when I actually opened myself up to the benefits of partnership, that's when my business really started to take off.
Let's talk about your early years, Brian. When you first got started, because I want to talk about scaling, which you've done, and you've scaled multiple businesses to a high level. You have scaled rentals and flips, obviously multifamily, but you also have a lending business that you had scaled as well. But you must have gotten started at some point. As a young buck, 12 years old, you must have gotten, into real estate somewhere, and bought some kind of rental or did your first flip or something like that. Talk about the early days of how you got started in real estate, and then maybe how you scaled some of those businesses and maybe what you learned along the way.
When I got started in this business, I had nothing. I knew no one, and I knew nothing. So I read this book that said that you can buy real estate with no money down. And I thought, well, that's speaking to me because I have no money. So I just read this book, so now I know a little bit about real estate, at least what the book told me. Unfortunately, it's probably the worst real estate book ever written. I don't even remember what it was. But if I could buy real estate with no money down and no knowledge, then I've got to give this a shot because I had a couple entrepreneurial bones in my body. I knew that I really didn't want to work for the man for my entire life. So if I was going to take control of my own destiny, I needed to find a way to make that happen. So I was 20 years old when I made my first real estate investment. And lo and behold, I bought it with no money down. I found a finance company that would finance, I think it was like 80% of the purchase price or something like that. The seller agreed to carry back a 20% uh, second for the down payment. And the closing costs were minimal because it wasn't a very expensive house. I might have even gotten a credit at closing for closing costs. I don't even remember. It's been so long. And I managed to buy this property with no money down, which was the only way I was going to buy a property, frankly. And that was my inauguration into real estate. And I came to learn subsequently that it's actually very difficult and very rare to buy real estate with no money down, even though yes, it can happen. It's not an everyday occurrence. But if you work hard enough at it, then I think eventually you might find the opportunity. Now, just because you need to have money down in real estate doesn't mean that it has to be your money. It could be somebody else's money. Now, in this case, my down payment was my seller's money because they did a carryback. But if you can't find somebody to do a carryback, you got to find somebody else that'll give you the money. And so my next deal, I did it by, and I caution our listeners here not to follow my advice and do as I did or even do as I say, but I'm just relating my story. Your story could and probably should be different. The next thing I did is I applied for every credit card offer that came in the mail. And it's like, you're pre-approved for a Discover, a Visa card, you're pre-approved for a MasterCard, whatever it was. I applied for all of them. And when I got all these credit cards, and I got approved for them somehow, I don't know how, I got approved for them. They would have a cash advance limit. And I went to the bank with a handful of credit cards, with a stack about half an inch thick of credit cards down to the bank, and I handed them all to the teller. And I said, I want to cash advance all of these credit cards to the max limit. And the teller looked at me like I had two heads. And I'm like, just do it. She's like, okay. So we start going through all these credit cards and cash advancing all of them. And I walk out of the bank with a cashier's check that I then use to buy my second property. And then after that, I managed to convince a major bank to give me a signature line of credit. It was only like, I don't even remember, 15 or $20,000 or something like that, a signature line of credit. This is 35 years ago, so I mean that went a little further than it does today. But I used that signature line of credit coupled with the credit cards that I had since paid off after I sold house number two to buy house number three. And now I've got like three properties that I've been able to acquire and fix up and resell. And that gave me this track record, as it were, as little and thin and ridiculous as it was. I would keep track of, like, here is the address, here's what I bought it for, here's what it cost me to fix it up, here's what I sold it for, here's the before and after pictures. I had everything, and like I put it all together. And then I went and talked to a friend of a neighbor or something like that, who was like, had a few $1,000s, and they were like wanting to invest in real estate somehow. And I was like, well, why don't we buy this next place together? And if you can use your money, I've got this signature line of credit. And this was like my first my like legit investor. And we went in on this deal together and fixed it up and resold it and made a little bit of money, and then did it again and made a little bit of money. And then now it was like, well, they told somebody, and then I was telling people, and other people at my job were like, what are you doing when all the on your days off, with this house stuff? And it just kind of naturally grew and grew. And I think this is something that I think is so important, is that people want to go out and be like, well, how do I go, raise $5 million to buy an apartment building so I can do my first deal? And it's like, whoa, 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 wait a minute, wait a minute. Let's instead focus on, what do you need to do to build a track record that you can show to an investor or a group of investors that are going to give you $1 million. That's step one. Go out there and do something. And it doesn't have to be what I did. You don't have to go buy a house and then another house and then a duplex and then a da, 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 da. That's what worked for me. That kind of natural organic growth worked really well for me. Other people take a different approach. They might go get a job, go get an MBA, get a job at a major private equity firm that does multifamily, and start at the ground floor as an analyst and work your way up the corporate ladder until you're a managing director. And now you're in charge of a portfolio. And then eventually you're like, you know what? I'm going to go out on my own and I'm going to do this. I'm going to like raise money from these. I've bought, $5 billion worth of real estate for this company. I'm going to go out on my own and go do it. That's another way you can do it. Some people take the brokerage approach. They become a multifamily broker, and they really learn how to broker apartment buildings. And maybe they even started brokering houses and selling homes, and they work their way up into commercial and become multifamily brokers. And then they get such a track record of selling this real estate that they build a following of people that have money. And then eventually they're like, I'm going to do my own deal. And I'm going to recruit these investors that I've met along the way. That's another approach. Some people go to coaching programs and they meet people who are in the business as syndicators, and they join up with them, and they join their sponsorship group in some capacity. Maybe they start out as an intern that's running around as quote unquote boots on the ground to go look at properties or drive deals or knock on doors or make cold calls. And then you kind of work your way up to where maybe you're asset managing and these kinds of different things for somebody that's already successful in the business, and learn the business that way. Somehow or another, you've got to get your foot in the door and step by step, block by block, build yourself up. Now, I did it by starting with small real estate and working my way up to progressively larger properties and progressively more complex strategies. And people just took notice and came to me wanting to invest, which allowed me to then layer on and grow. Everybody's story is going to be a little bit different. What you don't do in this business, if you're trying to scale, is you don't just say, I'm going to do my very first deal. It's going to be a $30 million apartment complex, no holds barred. There's no other way for me to do this. And that's all in on that strategy. It's the only thing that you're doing to further your goal, because if you don't succeed, you completely fail. And if you don't succeed and you feel like you failed, and you quit and you give up, and then you never come back and you go off and you do something else. And a lot of people fail for that very reason. I think it's very important that people find a way to get the door cracked open so that you can shove it all the way open. Scaling is very, very difficult and time consuming, and it requires dedication, it requires a plan, and it requires you to stay after it and not give up. And a lot of people just aren't able to quite get there.
Talk about the need for building teams when you scale. I remember, when I was doing single family house, you don't really need much of a team. You're just buying a house like you did, the one you live in, and then you fix it up and then you just do it again. But my observation has been in scaling my own companies, but watching others, they tend to build teams. Specifically in multifamily, for example, I think you mentioned earlier, you're partnering with other sponsors. And our ecosystem, literally all of the deals, almost all the deals that are done in joint ventures of some sort. And we have found that people who are joint venturing with each other accomplish larger things. People who have experienced advisors on their team, people have professionals on their team. To what degree did people that you came across help you scale?
Investing in real estate is a team sport. It's not an individual sport. Now, for the first decade I was in this business, I was the Lone Ranger. All I wanted to do was my own stuff. I didn't want to be bothered by anybody. I didn't want anybody else being a part of the decision-making process. I didn't want to consult with anyone. I wanted to be the guy. And that worked to an extent, but what I found in terms of scaling was when I actually opened myself up to the benefits of partnership, that's when my business really started to take off. Now, partnerships can be either side of the coin. They can be massively successful. They can be massive failures. And I think one of the biggest mistakes that people make when partnering is they partner with themselves. In other words, they go out and they find somebody that thinks the way they think, does the things they do, has the same experiences they have because it's familiar to them. And it's natural to say, like, man, you and I are like brothers. And we think the same way, we do the same stuff. We should partner up on a real estate deal. And the answer really to that is that's probably the worst person for you to partner up with. You want somebody that thinks differently than you, has different experience, brings things to the table you don't bring, and vice versa. That's where you have a real shot at success in a partnership. Now, this team sport of real estate isn't only just about partnerships, it's about teams in general. And as an individual, can you go out and buy a single family home and flip it? Yeah, you could. You could go make Home Depot runs with a U-Haul truck, pick up supplies and materials, and go to the appliance store and buy the appliances and go, hustle them in there and do all the work yourself. You could be up pounding nails on the roof. You can certainly do that. You can scale a house flipping business. So if you have a team, so first member of your team is going to be your contractor, somebody that can fix that property up so that you can focus on finding the next deal. Well, how are you going to do that? Well, the next person on your team is your real estate agents, right? Who's out there helping you find deals to buy, or bird dogs, somebody to help you acquire real estate. Once you find a deal you can buy, you got to have somebody to close the deal. So a title company is going to be on your team. You got to get insurance. So you're going to have an insurance person on your team. When you grow into multifamily, nothing changes. You still need brokers. You still need title companies. You still need contractors. You need a property manager. It might be you, but I don't recommend it. You want a professional property manager that knows how to manage the type of assets that you're managing or that you're buying. All these members of your team are not just there to help you, but they're there to give you advice and guidance. So when you're looking at buying a deal, what do you know? Well, you don't know really much of anything, right? If this is one of your earlier deals. So how do you overcome that? You ask questions. You ask your contractor, what's it going to cost to fix this place up? You ask your broker, what's this going to be worth if we do A, B, C, and D to it and put in a new roof, kitchen, windows, paint, siding, new carpet? You ask your insurance company, what's it going to cost to get my insurance? You ask your lender, what's it going to cost to get debt? All these people are there to help you. You ask your property manager, what's it going to rent for? What are the expenses going to look like after we buy it? All these people are there because they specialize in the part of the process that they're going to do for you. and they're the best one to give you all the numbers. And now your job is putting all those numbers together. You don't have to come up with everything. All you have to do is take all the information and be a deal architect to put the thing together in a way that is going to show you that the thing is actually going to pencil. And where do you find this team? You're going to find it by making phone calls. You're going to ask for references. Here's one of the best ways I found was, let's say I want to buy apartment buildings in Atlanta, Georgia, the home of the Michael Blanc brands. And I don't know anything about this market. I don't know anyone in this market. So what am I going to do? I'm going to go figure out who's selling multifamily properties in the Atlanta market. I'm going to talk to those people who are selling those deals, those brokers, and I'm going to ask them, you know, you see all these properties that are, trading and you see their financials. Which management companies out there are really getting it done? Who's like doing good reporting and really good property management? Who's doing a really good job? Those brokers are going to know, and they'll drop you some names, and then you talk to that property manager and you say like, well, who are your clients going with for insurance? And oh, well, this guy does all the insurance with everybody in our portfolio. You call them. Do you know anybody? I'm looking at this property, it needs a ton of work. These are the things it needs. Who do you know that could fix it up? And they could say, well, these are contractors that we've worked with, and they can help you grow your team. Your team can help you grow your team. And this is what scaling is really all about. It's about putting all these people together so that you can accomplish an objective. Now, what I found even more so than the outside resources is your own inside resources. Who's in your partnership? Who's on your side of the table with you to help you do all this stuff? That's extraordinarily important. If you can get aligned with somebody that really brings a skill set you don't have, you can be a very formidable team if you have the right backing from all these other team members. This is what scaling really is. Scaling is about building a company, and building a company is really just an association of people, right? Any company, I don't care what the company does, any company has two major assets. It's human resources and it's intellectual property. Those are the two things that drive any company, and it's no different in real estate. It's no different in being a syndication sponsor. It's no different in being an individual real estate investor. Putting together the right people with the right intellectual property. In other words, what you're using to analyze deals, how you're putting all your information together, the way you're thinking about your approach, your strategy, all of those things are your IP. Layer that together with some capital, and you can scale into an incredibly large business, as I did, starting with absolutely nothing 35 years ago, and now having bought almost $1 billion worth of real estate. And anybody else that has all the information that we've given in this talk that we're doing could do it so much faster than I did, because I had none of this when I was trying to grow.
Let's talk about possibly doing it faster. So, because you've been doing this for a little while and you learned a lot of lessons, and sometimes not that I regret doing certain things, but there's certain things I learned that I would do differently if I could do it again. Are there some lessons learned that you had over the years about how you would scale differently or more efficiently? Or what are some of those lessons learned?
Lessons are really only truly learned the hard way. The best lessons that you'll ever learn in this business come from your failures. When you have a success, you don't often learn very much from a success. The only thing you learn from a success is that you're invincible, that you're the greatest real estate investor of all time. Success doesn't teach you a lot. It maybe affirms the things that you're doing, unless you just got lucky by the market. But lessons learned are learned through failure. And there's a lot of different ways that you can fail in this business. And failure is kind of a necessity, as I hate to say. And people often will ask me, now that you've been doing this for so long, what would you do differently if you were starting over again? If you got to still know everything you know now, what would you do differently? And I think the real answer, if I'm being honest, is I would do nothing differently. Because as much as some of the things I did, I wish I hadn't done, they were very painful. every single one of those things taught me something that I either did again because I did the right thing, or didn't do again because I did the wrong thing, or did differently because I did the wrong thing but found what the right thing was. And I think it's really important for people that are starting out in this business to understand that failure is simply part of the process and not necessarily something to be feared. Feared enough that you don't want to be fearless and just, go out there and go crazy and, do anything because you don't care if you fail. I mean, obviously we all do. But failure is just simply part of the process. Now, there's a lot of things I could do differently now that I couldn't do differently then, because there's so much more technology now. I mean, when I first got started in investing in real estate, email was just becoming a thing. The internet was still like dial-up modems, where you had just enough throughput to like transfer a text file if you were willing to wait 5 minutes. Now you can like hop on Google Maps and Street View and drive through a neighborhood 1,000 miles away in 15 seconds. Uh, that really has sped up your ability to succeed in this business. Is just simply the delivery of information. The digital age has made such a difference. So I guess if I were to say what things could I do differently now, I would say, well, I would employ all these technologies into my business much earlier. I would I would have access to and I would utilize information at a much greater rate than I did. Instead of like reading one book a year, I could literally watch an hour-long podcast a day. I could join, virtual meetup groups that meet with successful investors all over the country on Zoom without leaving the comfort of my home. There's so many things that you can do now to connect. Bigger Pockets was a great resource where investors come together and talk about investing in real estate and share advice and stories. And that wasn't a thing. There was nobody I could write to and say like, oh, hey, what would you do? Well, now you can. So if I was starting over, one of the first things I would be doing is asking people, hey, what would you do in this situation? I've got this deal. What would you do? And said before, I used to have to figure it out and be like, well, I'm just going to do the deal and we'll see what happens. And then I go later on, I'm like, oh, I sure wish I hadn't done that deal. But I guarantee you, if I would have gone onto an online forum and asked people like, hey, here's the specifics of this deal, what would you do? Everybody would have said, don't do that deal. And I could have maybe saved myself some trouble. So I think I would employ all these technologies. Now you got artificial intelligence. We're just now starting to deploy artificial intelligence into our business at a massive rate. The things that we're doing with artificial intelligence right now are extraordinarily interesting to me, and none of it has anything to do with acquisitions. And so this everybody's saying, like, oh, how can I have AI find deals for me? No, forget about it. We're employing it to better manage our assets. And we're finding some incredible things that we're doing. And that's something that wasn't even in existence, well, even 2 years ago, let alone 35 years ago. So that's why I think that anybody listening to this can look at my 35-year career that really began scaling after 10 years, got into the groove after 20 years, and like went flying after like 25 years, could probably cut all of those at least in half, if not into quads, and do it much faster than I could have, thanks to all the things that are at your fingertips today.